Bitcoin price action before the month of September closed, which was pretty bearish and red looking. I was on multiple videos giving the idea that even if it's a red October, which I still think it will be at this point, even if it's a red October and you're on the side of short-term time frame and mid-term time frame bears, even under that premise, I would still, in my most likely or second most likely scenario, expect a move up to roughly 21K over a time frame that will last either the first or into the second week of October. And in those multiple videos, I believe the dates that I pegged were the 10th through the 15th, given a rough time estimate on when you can emotionally prepare for the macro trend down to continue. And as of now, looking behind me, we're going to look at where 21K is, and it looks like it's on its way there. And so what I'm going to do in this video is give some ideas of, yes, the plan as of now is essentially working out, but when do you change your plan, either from a breakdown standpoint or it's going to overshoot this target and use it as support? What are we going to look for in order to change the general idea, or at least what Cosasverdes is thinking? When is Cosasverdes going to, change his thoughts, his main play that, hey, 21K is my main target, early October, and then the macro trend continues down? When do I personally change so that you can know what I'm thinking? So let's go dive in and get this dang Bitcoin. You ready? Here we go. I'm going to zoom out to the 4-hour chart, and I'm going to take off all indicators, and I can get rid of these horizontals. Nice clean chart here. I would take this guy off, and all I have are my origin lines and bare naked price. Here's the 4-hour chart, and this is the 69K top for a point of relevance at November of 2021. All right, so far so good, and we're going to focus in. So just to look at what we're looking at origin line wise, these lines are a big deal. They are the macro of the macro lines, right? They're the most macro line that you can get. Like, if you've ever saw that movie Super Troopers, like, we're already pulled over, we can't pull over any farther. It's the same thing. Like, you can't macro any harder than this macro. That's what origin lines are. So price is flirting with one. So to begin with, why I've been so focused on 21K as a target for early October, even under the premise I'm bearish for October. I think everybody, the whole October theory, I think, my guess is that's going to be wrong. However, in this video, obviously, I'm going to show you when I will change my mind on that being improbable. But I've been thinking, it looks like it's trying to make some higher lows here. So zooming in, it's making some higher lows. So it looks like it just wants to gravitate up to here and touch it one more time. So let's see if that's common. Like, has it done it in the past and taken out multiple local? So in its journey to there, it's got to take out this local high. Here, let me zoom in. So current price, it's got to take out this local high, that local high, this local high, this local high in order to touch that. Has that happened before? Like, why would I think, it's just going to touch here based off of these higher lows? If it has to do all that work getting over all these local highs, like, man, that's kind of weird to have anticipated that last month. So let's look back. Oh, here you go. Check it out. Local high, local high, local high, local high, local high. Took them all out and did what? Let's zoom right into there. So the date of this was May 31st of 2022. All right. So structurally, I'm going to zoom way in on the 4-hour chart. Way in there. There we go. How low can you go? There you go. Okay. Less than $50 off. So yeah, it just recently happened this year. So it could easily do that, and it could easily be the right idea. So this is the idea that I have in mind. And it literally just happened. Was it the last breakdown? No, it was the second. It was this. Yeah, no, it was the very last breakdown. It was the very last breakdown that we had, going from 32K down to this drop right here brought Bitcoin to 17.5, which is our current yearly local lows at 17.5. Just happened. Where was the weekly 10? So now I'm going to incorporate the weekly 10 as an indicator. The weekly 10, it didn't even get close to touching it. I think this one touched the daily 21 instead. So put on the daily 21 EMA, maybe. It did a failure pattern above it. But from a structural non-EMA standpoint, just structurally, without EMAs, sometimes it just wants to touch this, and it happens to have a failure pattern above a key EMA that's in play. So is there, without focusing on which key EMA you have in play, is there a key EMA just under this, right? So that you have a lot of people shorting at that key EMA, creating liquidity here in forms of liquidations for high leverage people and the stops, so that it creates more incentive for whales to push it up there. Okay, is there something like that in existence? The previous one, it was the daily 21, which is a very, very common bear market rally area for the stock market and for crypto. Daily 21's a pretty big deal in a bear market. And it's a big deal for pullbacks in a bull market, really. So let's look. Weekly. There's the weekly 10 right here. So would it make sense, all these conditions happening, can it take out, or does it need to take out multiple local highs from price structure? 1, 2, 3, 4. Yes. Okay. Is there a key EMA that is just under the origin line? Check. Number 2, right? And did price not touch the origin line below? Because if you touch the origin line below, then when you come back up, you actually have full permission to break above and stay above, like forever, right? If you were to do that. So did the last one not touch the origin line below? And it did not. That's about as low as it went. Did not touch this. So really all the conditions for the setup are pretty darn similar. And here is when, now what I'm going to do, so I've summarized what I was, I probably covered that exact same stuff when I was covering this thought last month, before my birthday near the end of September. So when am I going to change my mind to the downside that it won't be hit? Which honestly, I'm not going to cover very long because it looks like it's going to hit it. It doesn't look like price is going to break down anytime soon, but I'm going to tell you why I think that, right? So in case if you're like bearish and trying to short now, I want to show you like why it's probably not a good idea to be doing that on micro time frames. And so I'll cover that first and more, to a small degree. But when do I change my mind to become more bullish? I'm going to focus a little bit more on that because I think you could have like a bigger bull trap and then come down, but it also could mean you're just going to keep going up. So that's what we're getting ready to dive into. Conditions for downside real quick, and then conditions for me being totally wrong to the upside. Let's dive in. Before we do, just make sure you're following me on Twitter, Cosasverdes with the number 2 afterward. And there's a join button right by the subscribe button below my videos. If you click it, a 90-second video with pirates and skeletons will pop up describing what the tiers get. And the links to the Discord community with visual instructions on how to check it out are in the description section of all my videos. All right, here we go. To the downside. Unlikely, but so the value, what I'm going to show you here, to the downside is, if you're short and trying to short right now, here is why it might not be a good idea. Not financial advice. Okay, here we go. All right, a lot of times when I try to determine how much more a move has to go, I like to use either EMAs of the 10s. Okay, so like the 1 hour 10 EMA or the 2 hour 10 EMA, very good indication of how much a move, like a strong move, especially to the upside. And this works very well in bull markets too, but to larger degrees. Like what I'm going to show you, like that's basically all I did in a bull market to like just kill it. But But this happens on bear market mini rallies or bear market full-on rallies. But I either focus on the 10 EMAs or the 200 EMAs. Either one is fine. And I'm going to show you why I don't think this move is near over. And why 21K is like, or higher is honestly very probable at this point, as opposed to it breaking down right where it is, which at the time of this recording, its local high is 20,450. All right, so let me do the 10s first. So the 1 hour 10 EMA, you got a decent move up, right, in which you broke above local highs. So that's the beginning of the move, is breaking above highs. Just standard kind of practice here, or standard like ideas. After a long consolidation, you break above all these local highs. See this? Local high, local high, local high, local high, local high. And consolidation broke above, right? Okay. So when it's starting to cool off, using the 1 hour 10, if your pullbacks are in general having 1 hour candles close above, you're not even close to being done. And when you start getting 1 hour candles close above, it's probable that the move has another local high to be made. So usually, like, my kind of rule of thumb is, I know it's probable that another push is happening after you start getting closures under the 1 hour 10. It'll pull back a little farther, and you typically get one more after this type of setup, right? Just wicks up within a consolidation. Price gets over this quite a bit. So let me show you where this doesn't apply. So see this sideways movement here? See how price got above this red line? See that? Let me take off price. See that right there, that red line? So price didn't break out above anything here. So just getting above here is not the same thing. Hopefully, the base situation, I'm verbalizing clearly. Yeah, you had consolidation. Bitcoin price broke above multiple local highs. That's a break, like a small term time frame breakout as of now. Okay, so when you have that situation, as opposed to a consolidation like this, you just wick above. Once you get a closure below, maybe even like this. So let's zoom in. Did you get a closure below? Yeah, so it closed below. Right? You usually, it's extremely likely you get 1 or 2 more pushes, at least. All right, so as of now, price is still closing above it. So it's not done. It's not just going to go straight down. This doesn't look like a bull trap. This doesn't smell like a bull trap, right? This one was. This one was an these were both bull traps. I think I nailed that one. I saw this one coming. I can't remember if I did well on my TIA in this one. I can't remember. I can't remember what I was talking about. But this one went straight up, straight down. Oh yeah, it was at the end of the monthly close. Yeah, we did anticipate this volatility fake out. Shit, we did it. So this was September 30th, and I think on my videos we were talking about volatility both directions, and that's exactly what happened. All right. I don't know if I got the level exactly here, but we anticipated a fake out. All right, but we don't have a monthly closure. We don't have, and that was a quarterly closure. Yeah, so we did, this is the quarterly closure. We have no weird closures or expirations of futures, of options, and no big monthly, big candle closures here. So we don't have to work, so we can kind of expect that this breakout is not a quick bull trap, right? That stuff happens at big candle closures or during high economic impact data such as FOMC, when Jerome Powell's on camera, or CPI data. Those two things, if you're not keeping track of it and you don't know when they're going to happen, well, you're not doing yourself any favors, because that is when price just goes both ways for no reason. Like that's the only reason, and it just goes straight back to where it was typically. You don't really get continuation, but it does shit like this, right? So you need to keep track of that stuff. All right, and that's we do that within the Discord community. Again, links to that in the description section. We cover that stuff pretty heavily, and we talk about the results of it and all that. Anyway, so it's above it. So this doesn't look like it's going to be done. So good idea not to be very short here. I sure as hell wouldn't be. It's kind of a rule of thumb. You're above the 1 hour 10. Hell, if you're above the 2 hour 10, you're sitting pretty. Like, it hasn't even closed one below this. So it looks like even if you get like 5 candle closures below here, it pulls back, you're still going to get it. It's still probable to get another move up to break this local high that it would form if it pulled back now. Right? But over time, I have liked dealing with the short or very, very small time frames. Therefore, the equivalent of that 1 hour 10 EMA and that 2 hour 10 EMA are the 200s of small time frames, right? But it's the same. It's the same thing. I just like seeing more tiny, tiny ass candles. So instead of the 10, I use the 200. And the time frames that I really, really like to use for the 200 EMA. And again, what I'm about to tell you is some valuable ass free information. Especially if this is new information to you. That's why, new viewers, that's why you hit subscribe right now and the bell for all alerts. And returning viewers, good moment to help out your content creator. For the algo, hit the thumbs up. If you happen to leave a comment, just expect I need to delete my clone scammer with the same Cosasverdes picture. I'll delete it. But if you leave a comment, I'll take care of it. All right. So the 200 EMA, I like to use the time frames 5 minute, 15 minute, and 1 hour. So what you can do is simply have on one indicator the 200 EMA, which is the only indicator on my chart right now, and see how up here, right? So see where I am right there, 5 minute. What you can do is just filter, flip through, like flipping through pages of a book. Just flip through. Okay, 5 minute, 15 minute, 1 hour. So the 1 hour, its price is way separated from this, right? So if you just jump straight to the 1 hour, you're going to think, oh my gosh, a big pullback, I'm going to short. Right? Like, even if I close my short there, this is tradable. Like 4%, that's bigger than what I actually try to achieve on my higher leverage trades. I try to only go 1.75 to 2%. But that's why you need all three of those time frames. You need to go down and say 15 minute. Same idea. It looks like it's going to slam down to touch this, right? Well, no, you need the 5 minute. They use it as support. So don't even think that the 1 hour 200 EMA, which is down here, for a 4% move down, it's not going to be touched until the 5 minute 200 is broken. So just do it in that order until so see how up here where I'm pointing in the small part over here, until that one's broken, don't even worry about the 1 hour 200. And then when the 5 minutes broken, okay, so let me draw over this. Once that's broken, then your next support where it might stop is the 15 minute one. And I'm telling you, this is really valuable if you've never used this before. And then the next one, if it breaks there, then you have the 200. And those would be your targets for a pullback before continuation to the upside. So the reason why it might not be a great time to be short is because it's on top of the smallest time frame one. Hasn't even broken that one. And it bounced off it perfectly and beautifully. Look at this. Let's go to the just freaking look at this. Look at that. That's almost perfect. Right? You know those ads or commercials that tried, or the pop-up ads on a phone or computer or on the sidebar, like if you're reading the news, it says like this Wisconsin mom or this Indiana mom or New York mom did this one trick and now she looks 20 years younger. This one trick, right? But that's all fake shit. But in this case, this one trick, like this Indiana dad tried this one trick using the 200s on those three time frames. I promise you, if you don't do it, it's very valuable. Very valuable. This one trick, all right? Not to be corny with that, but that might be a good way to remember its power, like me relating it to those stupid freaking ads that everybody's seen. All right. Now to the upside. So where will Bitcoin, or no, what am I personally looking out for in my preparedness to be wrong to the upside? Which means I am guessing 21K will potentially end this rally. Maybe a failure pattern above. That still is in with the parameters of 21K being where it stops. So, give me some wiggle room up to 21.5, right? But this is the general target. So when do I start changing my plan and realizing, hey, this is no longer the most probable, or I'm just fucking obviously wrong? All right, so I'm always like, I try to always be prepared to, I try to have two main ideas, right? And I always try to figure out, when does one idea become instantly, like, where's that threshold? Like, what do I need to look at so I can pick this, like, in a very distinguished fashion between the two most probable? Now I can focus on this one now that that trigger has happened. But also, so independent of that, yet simultaneously, I like to know, what is that threshold that I'm just plain wrong? Because I'm not the king of Bitcoin, right? I can't control where it's going to go, so I'm going to be wrong a lot, and I'm always predicting where price will go. So I like, even if I am better at TA than everybody on Earth, right? So I said if, I'm not saying I am, but if I were, I would still be wrong all the time. So I have to be prepared to be wrong all the time, right? So but I want to know the threshold, right? So where's my threshold? So where I'm going to start being interested in being wrong and identifying, okay, I'm going to be more and more prepared to be wrong, is if this, so this is the weekly 10 EMA. If price, even if price gets rejected by this origin line right around 21 and change, if price can come down on this weekly 10 and use it as support and start curling back up and approaching this line a second time, that's where I'm not going to, I guess, for lack of a better term, admit defeat. Like, I don't think that's the threshold of I'm very likely wrong. But that's where I start. I like, if I'm in short trades or whatever, I'm probably going to get out of them. Like, that's where I just want to be flat. I don't want to, I need something else to happen before I have an edge, right? So I would say that's where my edge to the downside is lost. But no edge to the upside from a small and midterm time frame has formed. Micro time frames, you can always find an edge in some way, right? Like dealing with the 1 minute, 3 minute, all that stuff. All right. So this is where my yellow alert, like a Star Trek reference, that's my yellow alert. The interaction of price between the origin line, or if you want to just do horizontal, around 20K to 20, around 21K to, let's say 21.2K. Just, you can do that as well. So the interaction of price between this level and this EMA, that is the first thing that I'm going to be looking at. Now, where I just flat out admit defeat, it can happen. I think it would happen in two ways. First, and most common way that I am wrong when I think price will be rejected is you consolidate. Actually, you just naturally get above the area and form in the action of going through my resistance target, which in this case is this origin line. Remember, you can't get any more macro than this, right? That's an origin line. Is you form a local high, use it as support, or maybe overshoot it, but then get right back on it, and then take out that high that you formed as you got above. At that point right here, so above that part, it's actually very probable that trading to the upside is by far the best option. Therefore, my original idea is not just probably wrong, but it's extremely likely to be way wrong, right? However, I have other yellow and orange alerts that happen. When price spikes above, obviously that's yellow or orange alert. If price can get, so let's zoom into this part here and go to the 5 minute chart. If price can, I guess that's as high as I can go, but as far over. But if price on very, very small time frames can get above it, okay, I'm still on yellow alert because it can just do a failure pattern and break right through, right? So I'm not probably wrong and bailing on everything on my plan. But so the first situation, it makes a local high, uses it as support, even if it overshoots it, but then gets it back above. I'm very likely wrong at the exact moment it passes this high. But my orange alert is, if it gets above here, before all that happens, if it comes back down, even if it overshoots it, if it gets above it or uses it as support in any way, shape, or form before taking this out, I'm not going long at that point, but that's when the odds start to, so that's kind of your threshold. At this point, there probably is some form of edge to the upside. But a tradable, reliable edge, I would say, doesn't happen until that high is taken out. Like, it doesn't have to be this exact level. Like, it could be a high, like, I mean, hell, it could only be this high. Like, price goes boom, and then goes and then goes under it, gets back on top, and then takes out that high. So it might not be very far above, but it's when it takes out this point, right? But even at this point, if it goes above, comes below, gets back on top, I think there is a probability to the upside, a very small one, and then an extremely tradable edge once that's taken out. The second way I'm looking forward to potentially being wrong, and again, I prefer Bitcoin to go up, but so I would like to be wrong here, is if I can anticipate price interacting. So again, interacting with the origin line and the weekly 10. That's what I'm focused on here. Is you come up and get rejected, a flat out rejection or a small failure pattern. So failure is just above, rejection's right at, but one of those two. And then the weekly 10 is over here and it's acting as support. So let me extend that red line, which is the weekly 10 EMA right here. That's the weekly 10. Price to get rejected and use this as support and then consolidate. And again, at that point right here, there might be a small edge to the upside, but the tradable edge doesn't happen until it's not necessarily this high taken out, but it's pretty similar. It's if you get rejected and consolidate just under an obstacle, which is the second most common way for resistance to be broken. The one I just showed you was more common. It overshoots it, lands on it in some degree, right? But it's right when you just approach it for the second time. You instantly have a tradable edge to the upside. If you get rejected, find support just under, and then approach it a second time. Okay, so that's the two ways that I'm looking forward to. I mean, I'm not saying it right, but looking forward to. That's the two ways I expect to be wrong. That's exactly what I would be looking for. That is how price will move. I'm telling you. If I'm wrong, it'll very likely do one of those two things. Like like if you look back in time and go to this video, I ended up being wrong because 21K area is not resistance. It will do one of those two things with an extremely high probability because that's just how price moves. There are a few other ways, but that's what it's looking like. So just, if you want to rewatch this part so you know what to look for, I would strongly suggest that. But you know what to look out for. To the downside, just use the 200s. In the middle, the weekly 10. Put the weekly 10 on your chart, right? You can use it on the 5-minute chart and have the weekly 10 on there. And then draw if you're not an origin line person because you just haven't figured that out. And again, I have tutorials on how to draw those for Bitcoin in my Discord within the... so again, links to that. It is in my tutorial, Cryptillion tutorial section. But you can just do a horizontal. So 3 things in play right now. Okay, to the downside, the 200s. In the middle is the weekly 10, and on top is the origin line or a horizontal around 20,100, 21,100. And until price is interacting or breaks through or breaks below any of those, that's really all you need to be staring at. If I can add one item for something that I would strongly suggest you have on your chart is it September or October? I think this is September. The opening of the September candle. And that is coming in right at $20,050, roughly. $20,050. Not $20,500, but $20,050. That would be a pretty good line to have on your chart as well. Because if you break below it, then you're looking forward to the 1 hour 200 EMA. That's like, it's probably going straight there, right? Using the 200s trick. But that's a nice horizontal that I think could come into play quite heavily. And hopefully my analysis. So remember the timing. Before I let go here, timing. Even if you're bearish and you think October's going to be red, I cannot stress this enough. This could be October 15th. This could last a while. Okay, that's what we got. Hopefully this guides you well throughout the next several days, if not 2 weeks.